Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. There are a lot of changes going on in the technology industry right now, particularly with artificial intelligence coming out, a lot of tech stocks falling because revenue growth is slowing, the easy money that has driven a lot of the development of apps and software as a service is starting to fall by the wayside, and companies are having to prove that they can actually make money long term. So as investors, one of the things I think we could do is just simply buy the really strong companies that exist today. The three tech stocks that I'm still really excited about right now are some of the biggest names in technology: Alphabet, Apple, and Taiwan Semiconductor. I want to highlight why I like all three stocks right now and show just how well they have done over the last 2 decades or more. My name is Travis Hoium. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my coverage. And don't forget to visit fool.com/Rive for the Motley Fool's top 10 stock picks to buy right now. Let's get into these three companies, starting with Alphabet. Now, this is the parent company of Google, and it's really ridden the wave of growth on the internet over the last almost 30 years right now, over the last 25 years. That was when the company was founded. Today, $283 billion in revenue, cash flow of over $60 billion in the last year. The stock has been hit a little bit recently because investors are worried that artificial intelligence is going to eat into its search business. I think that could actually be the case, but let's keep in mind that there is more to Alphabet than just search. You're watching this on YouTube. That's a massive business, actually generates more revenue than Netflix does. So that's a huge business for Alphabet to leverage. It has Office solutions with its G Suite. And even just this week, it's starting to offer some of its artificial intelligence technology to other companies, similar to what OpenAI is doing with Microsoft. But in this case, it's Alphabet that has actually developed the artificial intelligence models and is licensing it out to other companies that are selling it to their customers. So while artificial intelligence could be disruptive in some ways to Alphabet, I think it's actually going to be good for the company long term, and scale is really going to matter in this business, and Alphabet and Google obviously have that in spades. I don't think there's any reason to make it more complicated than it needs to be. Alphabet's a great company, trades for a reasonable price to earnings multiple of 22 right now. It has a great balance sheet, and I don't think as a technology business it's going anywhere. Similar things can be said about Apple. I think Apple may actually have more tailwinds behind it from an artificial intelligence standpoint, because these are going to be the devices that a lot of this computing is going on. Whether the AI compute is happening on device or in the cloud, Apple is going to be involved, and we're not going to stop using smartphones or computers. We may just use them in a little bit different ways, and Apple is going to be able to grow the ecosystem of products. I think even grow ancillary products like AirPods as more capabilities are being added in a passive way. I mean, if you're wearing AirPods, you can maybe just ask Siri. If Siri is artificial, you can already ask Siri questions, but I think those capabilities are going to be the kind of things that improve vastly over time and just make Apple a stickier and stickier product. You can see here that revenue, net income, free cash flow have all been growing tremendously over the last 20 plus years. We may not see that same growth rate over the next 10 years, but I do think this is a company that's going to be very stable. And once again, investors are getting a reasonable price to earnings multiple of about 27 right now. Still fairly expensive, but you have to pay up for quality in a market like this. And the final stock is Taiwan Semiconductor. This is the company behind the scenes of all of these technology companies, of all Apple, NVIDIA, AMD. All of these companies design computer chips, but it's Taiwan Semiconductor that makes them. They're the foundry. They're the company that's putting hundreds of billions of dollars into building new and advanced foundries that nobody can compete with. They're actually the one that broke Intel in a lot of ways. You can see from this chart that they've been growing consistently for 25 years. Growth kind of comes in fits and starts, but that's typical for a cyclical business like this. I think what's unique in this current moment is that Taiwan Semiconductor has such a lead over its competitors, and it has such big customers like Apple, like NVIDIA, that it's just going to steadily grow over time. Tremendous cash flow of $17.5 billion from a free cash flow perspective. Price to earnings multiple, the best out of these three companies at only 14 times earnings right now. Like I said, those earnings may be volatile over the next 5 to 10 years, but this is a company that is more important than a lot of us probably know in our lives. and I think will continue to grow, will continue to generate positive margins. One amazing stat about Taiwan Semiconductor, if you just look revenue and net income, their net income multiple hovers at about 50% at all times. So 50 cents of every dollar becomes net income. That's just tremendous performance for any company. I think is another reason that Taiwan Semiconductor is an industry leader and one of the tech stocks that I'm really excited about right now. So if you're into investing in tech stocks, but looking for a little bit of safety, Alphabet, Apple, and Taiwan Semiconductor are great companies right now. I think they still have a bright future and will beat the market long term. Don't forget to subscribe to Rive Investing. Don't forget to subscribe to Rive Investing. Thanks for watching, everyone, and I'll see you here next time.